So, welcome back to Everything Marketplaces, where we talk with founders and leaders from some of today's top marketplaces. So, this is episode 84, which is a really great group chat that we just had with Tilak Joshi, who's the CEO of Lean. So, Lean enables marketplaces to offer embedded services and financial products and is backed by top venture funds, along with founders and executives from marketplaces like Instacart, Uber, DoorDash, Postmates, Bird, and more. So prior to Lean, Tilak also led the team at Mint.com, and before that was at PayPal. So it's some really incredible experience. So this is a really great chat with Tilak, where we got to learn more about his previous experience at PayPal and leading Mint.com. What he's now building with Lean, we dove into embedded services and finance for marketplaces, and also had a great Q&A for those on the chat. So I really enjoyed this conversation, and I know you're going to find it a great watch to the end. So Tilak, welcome to the group chat. It's definitely great to have you join us here today. So you have some really incredible experience when it comes to building financial products and services. I'm also a huge fan of what you're building with Lean. So really can't wait to chat more about it. Before we jump into things, though, I think it'd be great if you could start off by sharing a little bit more on your background for those that don't know you.
Yeah, well, thank you for having me on and letting me talk about this. I love talking about this stuff and geeking out about it. About me, I've spent the vast majority of my career in financial services and fintech, just all across the board, from tech companies like PayPal and Intuit to financial services companies like American Express and Citigroup, and just trying to solve very similar problems on all sides of the coin. And the most fascinating thing about it has been how much the world has changed from when I started at Citigroup in like 2007, right before the financial crisis, to like 2022 and what the world looks like today from a financial services perspective. The changes are fascinating. What's also fascinating, though, is the things that haven't changed and the things that have stayed the same over the course of the last 15 years. And it's something that I'm very passionate about changing, right? Like any problems that exist, if the industry is moving forward but leaving certain segments behind, we can't have that happening. And even before I started working in financial services, I was an engineer at NASA for a few years, writing code, and then I moved way left into financial services. So.
Yeah, that's a really incredible background, and thanks for sharing more with us. So, going back to your experience at PayPal and then Mint, what were you working on there? Maybe what were some of the kind of challenges?
Yeah, great question, man. At PayPal, which came a few years before I joined Intuit, I joined PayPal during a really interesting time when there was like a big CEO change. PayPal was still part of eBay when I started, but it was planning to no longer be a part of eBay by the time I left. But a lot of my time was spent on the data and how data can improve the products side of the business. And so the PayPal used to have like a data technology business, and they had a consumer product business. And my team was the glue in between those two organizations to a certain extent. And a lot of it was, how do we use more data than most people can even think about that PayPal has to actually drive day-to-day value to everyone that's considered a customer of PayPal, from consumers to merchants to even developers. And it was my first, the deepest foray into financial data that I've had in my career, and pretty relevant to kind of some of the things that we're thinking about now, and being able to understand that data and understand the power of it if you use it correctly. And then fast forward from there, I had a pretty extended stint at Amex, but let's skip over that unless we jump right into it, because this is kind of where Lean came about almost. During the time that I had, I was running a product called Mint at Intuit, which is the largest personal financial management app out there. And what drew me to that is I had spent a lot of my career in financial services, but not enough of it doing things that would drive impact, which is important to me because I came from pretty humble origins, single mother household. My mom was making $18,000 a year when she bought her first house, which is absurd to me. I don't even know how she did that. And just kind of watching the struggle, watching her work 2-3 jobs, going to school, just through when I was really little to when I was in high school, and just you learn things from that, and you empathize with this particular struggle. And here I was at American Express trying to get people to spend more money on their black card. It didn't really seem like it was a personal fit, and I wanted to move more towards something that was solving more problems for people that really needed it. The financial services have failed a huge segment of the American population, and no one was doing anything about it. And I care about it, and I'd spent so much time in it that Mint was almost the perfect opportunity. It was the tool that I used to manage my finances. So being able to go over there and help drive growth there and help get it in the hands of more people, help build the right feature set was something that was personally quite impactful to myself and to where I wanted to move within my career. And so the journey out into it was a fantastic learning experience, but also just a special project that I learned a ton from, but was able to make some impact to as well. So I spent a lot of time figuring out, what does Mint look like in the future? Mint, after it was acquired, didn't really have a clear strategy or roadmap. The founder left, I think, a year and a half or 2 years after. And then it just kind of became this asset that Intuit had, and it self-operating. But then somebody realized that Mint gets 2 million organic app downloads every year, and that's power. Like, who gets 2 million organic app downloads every year, but is not focusing in on that particular product? And so in 2018 was when this kind of internal focus shifted to figuring out, like, how do we handle this? Like, how do we turn this into something of value for the Intuit ecosystem and for all the customers? And so I spent a lot of time figuring out where Mint was doing well and where Mint wasn't. And one of the things that we came across is Mint serves everyone, from people that have hundreds of millions of dollars to people that have nothing, just debt. And you can't solve all of those problems with one product, because what you're going to end up doing is building 10 different products and calling it one product, right? And so a lot of what the focus was at Mint was, how do we drill this thing down, focus, and just really nail it for a particular segment? And of that entire spectrum, I focused in on the lower end segment, because I felt like that's where Mint could have had the biggest impact. And that led me into the gig segment and looking a little bit into this, what I thought was a new segment. What I very quickly found out is there were 60 million people in it, and this was in 2019. And it was expected to be the majority of the working population by 2027, just about everywhere I read. And Intuit had some commission studies as well. I spent some time thinking about what Mint would have to look like to solve this, and it wouldn't look very much like Mint to really solve all the problems that gig workers face. But some of the problems that I came across were 60% of anybody in the gig economy, they struggle to make ends meet. They don't even have $400 in their bank account. So they go and get one big purchase, and suddenly they're in debt. And then debt perpetuates, right? Approximately $30,000 is how much debt each individual gig worker is in. And when they need liquidity, when they need that money, when those problems come up, they can try to work as many more jobs as they can, but they're not going to get paid fast enough to cover an expense tomorrow, right? They're not going to have access to credit that's reasonable to not get them in debt. They're going to have to go and get a payday loan for 50% interest, or go and get a credit card debt for 25, 35% interest. And it's absurd. The financial systems have truly failed this segment, and it gets deeper, right? Like, now these workers that don't have liquidity now have trouble with housing as well, because your gig work that you do is not considered stable income. Even if you're making more than someone that's W-2 making 50,000 a year, and you're making 80,000 doing Uber, Lyft, or whatever gig economy company that you're working with, your income is not considered steady. And so a lot of times landlords will say, hey, you can't rent with us. We want to approve you. And mortgage companies don't have any models to support this new segment that's expected to be the majority of the American population. I mean, if you really think about this and how many people are a part of this, it's a pretty dire situation, or a dire outlook for the country, if this problem doesn't get solved. right? Like everyone wants to do gig work because you get flexibility. We're all individuals. We all need that flexibility. But nobody gets that stability that you get with W-2. And we need to break those chains, right? We should be able to get that stability and have that flexibility. Like it's 2022, and a lot of this stuff, like all the infrastructure to build something like this has been around for decades. And there just hasn't been a deep enough focus on paying it forward as much as there has been on, in my opinion, on cashing in on the latest trends. And I just felt like it was the right time at that point when I came across that set of problems and understood that Mint wasn't going to be the product that solved it, to step away and say, look, we're going to go in, put everything we have, like all the experience we have, hire the best people from our network and try to actually solve this problem at scale. And that led to that Mint journey was what led to the origination of the idea behind Lean. And then there was a lot of work that went through defining what Lean specifically was, but the problem space was clear to me more than a year before Lean actually started.
Yeah, that's great. Thanks for sharing with us, and I can definitely agree that it's such a big problem, and it sounds like you're in a very unique position to to see that and gain that insight and be the one to solve it. So I'm curious to learn more though. Leading a team like Mint though, what made you? I guess what was that kind of like forcing function or like got you to kind of commit to being taking a leap in being a founder?
Yeah, it was terrifying. I mean, I have two kids, a wife, family. It wasn't like, hey, gonna leave and try this thing that's gonna risk our entire livelihood. But it was really just, I think as you get older, you figure out who you really are, and what's important to you as an individual, as a person. And I don't think I would have been able to be happy with myself, reflecting back on my life, if I didn't go down this route. And if I find a problem this big and you just turn away and you walk away from it, that's a pretty selfish move, and I was bearing the burden of the problem for whatever reason. I chose to bear that burden, and I decided that I needed to solve it. And the timing coincided with when Intuit acquired Credit Karma, which was like a project that I was working on, and we closed it. And during that, we were actually talking to a lot of neobanks, et cetera, just through the M&A journey, like the top 10 fintechs that you've probably heard of, like consumer fintechs, and nobody had an answer to this. So I knew the problem wasn't solved. We had just closed a big chapter at Intuit. Personally, it was something that I just couldn't let go. And it was something that I felt like I needed to give it a shot, just given who I am as a person. And it was just enough conviction and like the perfect chapter closing and ready for a new chapter to start for me to dive right in. But it was terrifying. I'll never take away from how terrifying it is to leave something immensely stable. But this is probably how gig workers feel, right? You never have something stable. You're out there working day to day, gig to gig, shift to shift, and you don't have that safety net, and it almost helped me relate a little bit more. Earlier in my career, earlier in my life, I did, but it kind of brought me back to my roots to a certain extent. So I'm really glad I did it, but that's kind of what led to it.
Yeah, that's actually a really great point as far as putting yourself kind of in the shoes of the gig workers on that. So what were like the first steps that you took to start Lean?
So first thing I did is started talking to people about it. I've never been one to, hide an idea and then like big reveal. It's just more like, hey, what do you guys think about this problem? Like, what's going on? And start talking to gig workers, and talked about, I don't know, 100 or so gig workers. Just spent literally like 2 months every day just talking to gig workers and like, hey, how's it going? Like, how do you deal with this? How do you deal with this? Like, how does this look? Like, how do you feel? Anything that they're willing to share, just taking notes on, ran a couple of surveys to understand how they prioritize different problems, because I listed off a whole bunch of them, right? And the ones I left out were health insurance, HSAs, 401ks. All these things are very difficult to attain if you're not working for an employer, a traditional employer. So that was step one. Step two was then saying, all right, there's something here. There's these like problems that need to be solved. Number one was liquidity for gig workers. It was, how do I get paid faster? How do I get more money? Number two was, number one and two were, how do I get paid faster and how do I make more money? Number three was, how do I get access to like better health insurance that has lower deductibles? Number four was around housing and mortgages and rentals. And number five was on taxes. And I was actually surprised to find taxes so far below, because anybody that's a 1099 gig worker has to pay taxes 4 times a year. But, after I thought about it, it wasn't as surprising. Having been so close to TurboTax, one thing you learn very quickly is nobody wants to think about taxes. You want to automate the hell out of that. And so that's why I think that was at the bottom. But so we started with the first two. And it was like, all right, well, how do we do this, right? In order to solve this problem, we got to get to gig workers. How do we get to gig workers? Well, who has the most gig workers? Gig companies. Okay, well, let's start talking to them. Do they care about this? And I started talking, I called all my friends at various gig companies and just started having conversations around this. And I started to find out staggering statistics. Gig companies on average see about 500% turnover. And so this is people that deactivate and reactivate their entire, like the equivalent of their entire base multiple times a year, deactivates and reactivates, which ends up costing a ton to try to create a stable company with a supply side and a demand side, where the supply side continues to fluctuate. And demand side does as well, but the supply side is a little bit harder to lock down because it's people's time, it's people's days, right? And a lot of it was being solved with incentives and like throwing money at the problem, which is what big companies do, and sometimes it works. And one statistic on the business side that shocked me was Uber spent $2.5 billion on retention and acquisition costs in 2019, which is crazy to me. Like that's just an insane number. And so I started to realize that there's something here, right? Like there's a particular type of behavior that exists, right? When you want flexibility, you're working for a need. And when your need is not fulfilled, you're going to go everywhere you possibly can to try to fulfill that need. So you're gonna gig for 10 different companies. You're going to take a shift here, or if you're a healthcare worker, you're going to take a month-long shift here, and then you go to another company and take a month-long shift here, just because that pays the best, that has the best outcome for you. But the companies, on the other hand, feel the pain of that, right? Because they're no longer have people that they can lean on, and they're trying to just throw money at the problem, try to fix it. But what if these companies were able to solve those problems for the people and maintain that flexibility, but actually give them what they needed rather than just throwing money at the problem? Just throw thinking at the problem. And there was this really interesting model in Southeast Asia with this company called Grab, which is like, now it's more than that, but it's like the Uber of kind of that market. And they're very big, but they decided to go really deep into like banking and financial services for everyone on their supply side and then everyone on the demand side. And it became an extremely successful business. It took them 3 years of building and iterating and trying to figure out what this thing looked like. But as of the end of 2020, they raised a round specifically for Grab Financial Group, which is what that business was, at a $3 billion valuation. That's how valuable that single service was to Grab. And Uber saw that, and Uber tried to do it in the US. The guy that was running it, his name is Peter Hazelhurst. He and I were talking the very origin of Lean. And Peter was talking about some of the things that he had learned at Uber, trying to build this for Uber's workers. And the big takeaway from that, Uber ended up shutting down that program in the summer of 2020 because it's really hard to build this type of program. And it's not just hard, it's risky, right? Like when you're a marketplace and you have a particular type of business, and you start to introduce financial services, nobody really looks at the marketplace side because there's much lower risk on the marketplace side than there is on the financial services side. So suddenly a business that has like a 10x, 20x multiple on their revenue only has a 5x multiple on their revenue. So it directly impacts the company's valuation. It creates a whole lot of legal compliance, regulatory functions that have to be built up, risk functions that have to be built up. it turns into this like 400 person business that now has to be run concurrently with the core business, which becomes a massive distraction. And there's a lot of heavy oversight on this side of the business as well. And when Uber was kind of looking at that, and they're like, all right, there's a lot of value we're already seeing, but we can't create another business. We're like in the middle, like the heart of this brand new pandemic at that point. What are we going to do? Create a different subsidiary that's a financial services company when our core business is already struggling right now? And Uber decided to shut it down because they couldn't sustain it. But what Uber ended up doing is they indicated that this is the path, but we don't know exactly how to do it. And when I was talking to Peter about what we were thinking about building, he's like, holy shit, this is like, Uber money in a box. Like anybody can turn it on, and anybody can turn on Grab Financial Group just like that and start getting lower cost, better services, better acquisition, better retention, and potentially revenue share in certain cases, and make this a revenue stream with like 2 weeks of work. That's like Lean's product basically, right? And he's like, oh my God, out of the box, that's crazy. How can you do this? And that was the challenge. How do we do this? And we figured it out, right? The way you do it is you go super deep on those things that nobody else wants to think about. You go super deep on legal structures. You go super deep on risk. Risk is one of the areas that prohibits financial services for a lot of people in this segment, because you have to rethink what risk looks like when someone's working day to day, when someone's working gig to gig. And so we went super, super deep on risk. My first person that I brought on was a risk expert. The second person I brought on was a counsel, like an attorney. And then not to mention all the external attorneys we were working with, but that was where we started. And imagine a startup starting with that. Like, like, hey, you want to work in this organization that's all about risk and legal? You superstar, rock star engineer. And the really smart ones get it. They're like, oh my God, you figured out the most complex part of the business. Yes, absolutely, I want to join it. But most people are like, what? Why is your organization so heavy risk and legal? And so it was interesting building out the team in the order that I built it out, because never in my career had I built out a team in that order. And it was fun, and structuring the product based on what we could do, understanding what we could do, pushing the boundaries of what we could do for this segment of workers.
Yeah, there's so much that you mentioned that we're going to jump into here probably during the group Q&A, because I feel like you and I could go on for quite some time about this. But kind of, I guess for some context, so could you just kind of give us like a brief overview though of like the Lean product today, and then maybe how it kind of fits within the marketplace stack for earlier stage marketplaces too, maybe?
Yeah, absolutely. So Lean today has two different products. One is an instant payout product where any worker can get paid out immediately after a gig or after a shift or daily or whatever cadence the marketplace wants at absolutely zero cost. No cost to the marketplace and no cost to the worker. And the reason we can do that is we've built our own banking infrastructure that is far more efficient than traditional banking infrastructure. And what that enables us to do is process these payments at 1,000th of a penny or less. And so we don't feel the need to charge for it. It's free for us to do with all the infrastructure that we've built. And so we will offer that for free. So there's never any cost associated with that for anyone. So now you can imagine, an Instacart shopper that drops off groceries. They have their money literally the moment that the groceries are dropped off to somebody's, doorstep. And before they're back at their car, they can go and like buy something off of Amazon or go to a gas station and fill up gas, right? And the money is right there, like immediate, instantaneous. I've literally been in a checkout line at Target before, just testing out my own product, and paid myself while I was about to swipe the card to pay, and the money came through. It was literally milliseconds. And so very happy with that product. And then the second product that we have is a liquidity product where we offer up to $1,000 that a worker can use as much as they want. It's a capital line that they can use as much as they want, and it's based on, it's like a percentage of their income. So if they're making X amount of dollars, they get Y% of that income available to them extra, in addition to getting paid instantly. And that product is also free. So both of those products are completely free for the marketplace and the worker. And a lot of this works because we've set up deep banking infrastructure, deep data and risk infrastructure, and we ultimately have capital also that we lend to people, and so a lot of this is enabled by reducing the level of risk that we take in the business and reducing the overall overhead costs that we have to make it free to our partners. And the way we make money is there's a debit card associated with our product. So anytime somebody chooses to spend on that, we make a little bit, not from them. Traditionally a gas station will pay like MasterCard when somebody makes a purchase, and we're just deeply partnered with MasterCard, and we make money off of that. Our banking pipes make money off of that. And so that's how we monetize the business. And so we monetize it completely separately from charging anybody. And so we feel like it's a win-win-win where we're helping marketplaces reduce their cost structure, drive up acquisition and retention. And at the same time, we're helping workers get that liquidity. That's their number one problem. And by virtue of getting that, they're staying with that marketplace. And we have a lot of like little bells and whistles where you can like set up loyalty programs with these workers that they can get more credit or more capital. In certain situations, if they meet preset targets, et cetera. But ultimately, that's what we do in a nutshell. And with the risk model that we've created, we can go much, much deeper. Some of the things that we have on our roadmap, we're exploring an income guarantee product where we could offer income guarantees to workers that have fluctuating income, all the way to we started a couple of conversations with some of the largest mortgage providers to use our risk model to provide mortgages to these workers. And we also have HSA and health insurance in the works. And so we're working on a lot more, but what's in market right now are those two products. And the one plug for our team has created such an easy to integrate product. The fastest integration was in 4 hours, and the average time from signing to getting into market is 2 weeks. It's like super easy. It's intended for marketplaces that don't want to hire a 400-person team to build out this like one feature, right? And so it's completely turnkey. So that's what Lean is today. It's the payouts up to $1,000 in an advance, all for free.
Yeah, that's great. Thanks for sharing. So what stage marketplace though?
We work the full stack of like the earliest stages. Like we have marketplaces that we're partnered with that are completely bootstrapped and are just raising their first round of funding. There are marketplaces that we work with that one just exited. They got acquired. And they had raised like up to a Series D. So everything in there, and we have really good relationships with some of the largest marketplaces. Our investor syndicate includes, people like the co-founder of Instacart, the CPO of Uber, . And so we're deep on the full stack. I think where the highest value comes is probably somewhere earlier. Like if you're at that really mature stage, you get value out of it, but you also have a bunch of money to burn, right? But whereas if you're at an earlier stage, you want to be much more tighter with the money and the value you get out of it in differentiating on the supply side and getting more workers in a market where it's really difficult to get the supply side of your platform, to reducing costs, to having somebody else kind of embedded that's like helping the business succeed, that's value aligned, early stage, and even like early mid is a really big sweet spot for us that we're seeing. But we also serve larger marketplaces as well.
Yeah, I was actually asking for two different reasons. The first, of course, is that any on-demand marketplace that we chat with in the community typically brings up the point and the kind of the focus on supply acquisition and retention. And then two is I kind of feel like the financial products and services might be somewhat kind of table stakes here pretty soon, right? So making it easy for the newer entrants to kind of compete with some of the larger players, at scale. So.
Oh, totally. We just had a partner that we signed with that was like, this is going to help us. So they used to be a taxi business and they pivoted to becoming a rideshare business, and they're trying to compete on talent and on the talent acquisition side with like Uber, Lyft, and all of these guys, and our product helps with that. Like it just does. It offers a superior service to what they're offering out of the box with like one engineer, one sprint done, integrated out there. And then we handle customer support. We handle all risk. We handle capital. We're giving you more liquidity, more cash flow. So there's a, it's an accelerant for early stage marketplaces. It is the way we like to think about it. And it's one of our principles in terms of, that's why it's no cost. That's why it's so fast to integrate, because I've been on the other side of it, right? Like where I'm integrating something, it's like, dude, I'm not going to take on a 6-month project to integrate this, I'm not going to pay X amount of money before I know if it works, and so we're just want to be friendly to everyone around us.
Yeah, certainly. We're going to jump into questions here in a second because I have a few in the chat. But before we do, so you have some pretty incredible investors, as you mentioned, with some top funds, and then founders and operators at some of the top marketplaces. So could you share a little bit more about what that fundraising journey has been like?
Yeah, it's been an incredible learning experience. Becoming a founder is a crazy journey for someone that's never done it before. And even if you've worked in big companies, it's just a whole different world. There's a level of accountability and to the business, and part of it is getting capital infused in the business. And fundraising is, you read about it like these big milestones, like these big press releases and all this stuff. But fundraising is actually something that I don't think many founders love doing, because it takes you away from your business, and and people will sit down and find every hole there is. But the fundraising journey for me was gradual almost. I reached out to a few folks that I knew, they knew somebody else, and then before you know it, there's like 50 inbounds that start to happen. But it takes 50 conversations before those 50 inbounds start to happen. There's like 50 conversations around just tightening your pitch, tightening your business, right? Like when somebody pokes a hole when you're pitching your business, you don't dismiss it like, oh, this person's a jerk, like why are they doing this, or they're, you take it. And it's like, oh man, is there a hole? Like, oh my God, how do we fill this hole? Like, oh, is there another gap? Oh, wow, how do we fill this gap? It's like, it's amazing. Somebody once told me that feedback is the greatest gift that somebody can give you. And so my approach to fundraising has been taking the feedback. You don't ever want to stray from your core mission and from the core product that you believe will be successful. But there's a lot of periphery things that you may not have thought about, that somebody will actually tell you to think about. And it's such a gift, and you go through that enough and you're resilient enough, you'll get there. You'll always get there. As long as you're listening and as long as you're willing to take the feedback and acknowledge it and accept it and improve the pitch. It may take, 10, 20, 30, 40, 50 pitches, but there's extremely successful founders that I've met who've had multiple exits under their belt, who still saw 40 VCs say no to them before they had the 41st say yes and lead a monster round for them, right? And they were doing the work during those 40 pitches. Every time, every single one, go back, what can I improve? What can I change? What haven't I thought about? What went wrong there? What can go right here? And ultimately you end up building relationships, you end up building a reputation, and then it becomes easier. Then you start to gain momentum with the business and it begins to get easier. But it's just a game of patience and understanding that they're trying to make money, right? Like they have to ask you difficult questions. They have to ask you the things that you haven't thought about. And that's the best investors, right? The ones that are passionate about what you're passionate about. That's where they're taking the call, but that also have thought about it as long as you have, or maybe even longer, and taking that and saying, oh, wow, thank you. That like free knowledge and free advice. It's extraordinary for 25, 30 minutes of time. And we really lucked out, because I think by the time we got through our 50 to improve our pitch, we had some great investors that were interested in us. Inspired Capital led our round, and we, and all of them were just so bullish on it. Penny Pritzker was the ex-Secretary of Commerce, so she has immense domain expertise on this space. Alexa Von Tobel built LearnVest and had this massive fintech with an exit, which is extraordinary from fintech side. But then we also went out And a lot of our strategy was around not just taking institutional dollars. You always want to take some because they keep you accountable, they keep you going, and they're connected, right? Like it helps you build your business. But then what I really love, like the part that I really love, and I lucked out with my VCs, right? Like I love them just as much. But on the operator side, there are a bunch of people that are actually doing work at either similar companies or companies that are your customers that invest, and they invest in things that they see value in. So we started talking to just kind of one person led to another, led to another. Ultimately, we started getting people that were so bullish about our business, from like the founders of Instacart, like from the C-level of Uber, from C-level of DoorDash, Bird, like the CEO of Handy, the that rideshare guy, like and very, very blessed and fortunate to have that type of support system where, as we're trying to solve these complex problems, not only do we understand the business side of it, how to build a great, extraordinary business, and have people we can call there, have mentors that have done it before, like Peter Hazelhurst, who built Uber Money, who have had missteps that we can avoid, but then also people that just understand the market deeply, that understand all aspects of the cycle deeply. One of the biggest things that I felt like I didn't have when I first started this business is a support structure. Like everyone has a support structure in like a traditional job, because you have your peers, you have your leaders, you have your team, and you have your, et cetera. At home, you have a support structure, you have your family, but when you start a company, you're just alone. And it's not until you build the right cap table around you and the right team around you that you feel like you have a support structure. And I'm incredibly impressed and thankful and grateful for all the people that are like betting on us, from our investors to the team to the customers that we have. And for me, my fundraising strategy was keep learning, get tighter, use this as free knowledge, free advice, free feedback, and then get the smartest people you possibly can around you. It's a team game. This isn't there's no me here, right? We're trying to solve a really, really big problem, and there's a really large group of people that care about it. And so let's get everyone together. Let's do this right.
Yeah, no, that's great. Thanks for sharing with us, and it's certainly proven to be a great approach. So, cool. So we're gonna jump into questions here. Hey, Richard, do you want to jump on?
Yes, I'll be happy to. Thank you very much, Mike. I appreciate it. Tilak, really enjoyed hearing you speak, and it's very nice to meet you. So I'm a CEO, founder of Citizenshipper. We're a two-sided marketplace. I founded it in 2008. We connect people mainly who are looking to transport pets long distance with drivers who can do the transportation. So we've been building a marketplace for over a decade now. A lot of your background really resonated with me. You mentioned you were a NASA engineer. I was a former physicist turned entrepreneur. Similar childhood background as well. You read off some really interesting numbers that you just had to hand. I have two quick questions actually. So the first one was you had some great numbers, like 60 million people in the gig economy, will be 50% of the population by 2027. I wonder if you can share a link to a PDF doc or a website or just something with these really handy gig worker stats. That would be really valuable. I'd like to have those kinds of numbers handy too. And I just took a look at your site. Really interested in exploring how Citizenshipper can work with your company. On the homepage, for example, I noticed that there's $1,000 advance. I think that would be super valuable because a lot of what we do is long distance transport, and the drivers end up asking for like 50% down payment from the customer before it's even done, so they can have the money for gas. What other financial products and services do you think would be valuable for long distance drivers on my platform? And how can we start that conversation with your company?
Yeah, well, that's one. It's awesome to hear the synergies in your background, because I find that fascinating, like where people start and where people end up. With regards to sharing a PDF, I will. There's various studies that we have bookmarked. I'll post them in the thread in the community, so everyone can kind of access them. Absolutely. And in terms of what types of products would be valuable financial products for this particular type of marketplace. I mean, I definitely think the liquidity aspect is universal. The $1,000 advance, absolutely. But something that would be interesting is, are the workers 1099 or are they W-2?
They are independent contractors, so they're 1099.
Right. So with 1099s, they just don't, like, this segment is underrepresented by like the credit bureaus. They don't measure them in the right way, and income is rarely used to risk them. And so all the financial products that we take for granted, like getting a credit card, going and getting a mortgage or an auto loan even, right, to get the right car, or even enough money to rent a car or lease a car, they don't have access to. And so I think getting access to a risk score that enables all of those services is like the ultimate, most holy grail for these customers. And so with our instant pay product and our $1,000 advance product, what we're doing is we're teaching our risk model how to be resilient. And when we get paid back versus when we don't for the $1,000 advance, we learn. Depending on how income shifts, we learn. And so using that, we're enabling all of those services I'm talking about, and they're going to come piece by piece. But I think all of them, and I'm a little bit biased here, but this is why we're kind of building these. I think all of them for the segment that you have are critical. But I would think that the advance is probably the number one service that your workers would probably want, and then instant payouts is probably another one that they would really want, which is just, can I get paid instantly? Can I get paid daily? Can I get paid hourly? Which I think is an incredible way to give them liquidity. And in terms of starting the conversation, I'll reach out to you. I'll see if Mike can connect us.
Perfect. Yeah, I would like that very much. I look forward to speaking to you more on this. I think this is a super valuable service. I think the drivers on our site would love this, and can't wait to get something started.
Awesome. Very exciting. Thank you for that question, and looking forward to more conversation.
Me too.
Yeah, I'll make sure I send an intro following this. So it's really cool to see Richard's actually partnered with some other marketplaces here in the community. So
awesome.
Cool. So actually, so Rich had a question. He had to jump off, but he wanted me to ask. So how do you think about underwriting a seemingly risky portion of the economy, and do your customers have an appetite to partner with you on lending so you can grow faster?
Yeah, that's a phenomenal question. That's one of the core hypotheses of the business. So hope so. But no, I think you have to take a unique approach to risk. Like if you try to take this segment and try to retrofit it into systems that have already existed from a risk perspective, like debt, like consistent income, versus figuring out what is risky about this segment. And the only thing that's truly risky is someone stops working forever, right? Like if you stop working with a particular gig company forever, then that's risky, because then it's a bad actor who took a loan and then stopped working with that gig company forever. But if someone has a relatively stable work history with a company, even though it fluctuates, but they have a relatively stable work history, there's a very high probability that annually they're making within 20% of whatever the median is or the mean is over the course of the few years that preceded and this year and the year after. And there will always be bad actors in any risk model that you have. There will always be outliers in any risk model that you have. But our risk model is heavily based off of or seeded through income and stabilizing income on our back end. And then we feed our model through payback, through our cash advance product, through spend habits. Like for example, if someone's spending all of their money on crypto, probably higher risk, right? But that's a fidelity of data that we have because they're spending it using our debit card. And so that helps us redefine what risk means for this segment. And it's more applicable to this segment because income is the ruling factor that has given them a disadvantage. In terms of partners working with us, it's all about proof, right? It's all about data. It's just showing them that, hey, we're already lending, like we're already giving money out and we're getting it back. Like that's what a credit score does for you. Like, hey, this person got a credit card and they paid that 30 days late. They paid that 60 days late, 90 days late. Ooh, that person's risky, or that person has too much, debt, et cetera. Whereas in our case, it's the risk of payback, right? And so we know the risk of income being too short because we're looking at their income. And we know that, oh, if it's too short this month, it'll be better next month. But then we're also testing our model repeatedly, and our model is learning from payback and patterns. And so, yes, it's very challenging. It's an inherently risky market. That was something that we were aware of going into it. And that's why people have had such a hard time breaking into this. Our risk lead is from Chime, our one of my co-founders. She literally built an entire alternative risk startup for emerging markets. So we take risk very, very seriously. But then with partners, they just want to know that they're not going to lose the money they put in. And the best way to show them that is put our own money in, bet on ourselves, and bet on our own risk model, and show them the data. Like, this is how much income is coming in. This is what we know. This is how much we've given. This is how much has been paid back. These are the patterns of people that are less risky. These are the patterns of people that are medium risky. These are the patterns of people that are high risk. And when you're transparent and you're open to that, people are open. Like, this is these. There's also a pressure on those guys, right? Like, to everyone from health insurance companies to mortgage companies, et cetera, that you can't only serve, half of the population. You have to serve the whole population to really perform on their metrics as well. And so we're enabling them by being the guinea pig ourselves and creating this from the ground up. So that's a great question, and something that I think about all the time. But that's kind of where I'm at on it. That evolves. The thinking evolves, right? Every time we have a conversation, the thinking evolves.
Yeah, I'm definitely not sure it does. So you mentioned with the gig workers, just their kind of history of income. So if they're, on multiple platforms, are you able to take that in consideration?
Yeah, so right now we allow exclusivity with each platform. So if a gig worker signs up with X platform, because we want to help our partners grow, we don't try to work across multiple platforms, but that's something that we could do, right? We have an alternative way of doing that is, instead of actually specifically looking at which platforms, we can look at their income and spend as a whole. And we do that through them linking their bank account. If they want faster access to things, they can always link their bank account, and we can look at their history, like automated, and determine if there's more money that they're eligible for, and refine our risk model with that. But we don't, for example, we won't take somebody and say, okay, here's your Uber, here's your Lyft today, because if we're partnered with one of those, we don't want to put them in a position where they feel like they can't trust us, and
Yeah.
we want to be value aligned with them. But there's alternative ways to do that, to inform our risk model.
So basically on an individual level versus like creating kind of like a network level for now.
Yeah, you kind of get network from like a secondary perspective, like through their overall income, but it is something that we're thinking about. There was a question around like syndicates of non-competing marketplaces, and so we're thinking about it and we're working through it. So I don't want to speak too definitively, because as a startup, you don't ever know what's going to happen tomorrow. But I wouldn't be surprised if by the end of this year we found the right solution to having multiple marketplaces coexist for a particular user.
I'd love to cut myself off on that. Otherwise, you and I'll just kind of go on. I want to get to the questions. Hey, Olivia, do you want to jump on?
Yeah, hi. So my name is Olivia, and I'm on the marketing team over at Dumpling, and we are kind of an alternative grocery delivery platform. We provide tools for individuals to actually not do gig work and run their own grocery delivery businesses. So I obviously a little bit, biased in my question. We believe the gig economy is somewhat broken, right? Like, there's definitely concerns with, people not getting paid appropriately, people getting deactivated, all these things that really feed the inconsistency that you're speaking to. And so I really love hearing kind of like your why and your personal reason as to why you're doing what you're doing. And my question to you is a little bit two-part. Like, A, do you feel like there's any piece of gig platforms bringing you on as like, not to be an asshole, but like a Band-Aid, like really like we're not doing a good enough job taking care of people who are working their butts off for us. And so we need to do this rather than Uber spending that, 2.3 billion to actually pay people better, right? We're going to give them these features that help them get paid faster and give them the liquidity that they need. But ultimately, like what they need is to be taken care of. And so that leads me into, do you guys ever project having some sort of like educational arm to Lean that you could actually educate gig workers, not saying leave these platforms, but to say like, hey, this is how you can do better with the money you do have. This is how you can like build your, your financial stability. And really, if you want to keep doing gig work because you like the flexibility, great. But like, we're going to support you financially. Is that something you've been thinking about?
Yeah. Wow. Okay. There's a lot.
Sorry, that was really loaded, but I'm just super stoked on what you're doing and like curious how it plays with like the greater gig economy as it is a whole right now, which is crazy.
Yeah. Look, I think there are various motivating factors to integrating somebody like us. And one of them is absolutely a Band-Aid to not being so friendly to workers. Mm-hmm. I think there are a few solutions out there that just integrating them makes you seem like you're a little bit better off, towards your workers.
I mean, you guys are giving great tools. Workers need the tools you're providing. So that's a win for sure.
Yeah. And even there are some folks, even investors of ours with big marketplaces that have mentioned, oh, well, our policy side would love this. Like our policy side, because they're dealing with like headwinds from like the government, like criticizing them for the treatment of workers. And so that does happen. Our goal is, regardless of incentive, we want to get the value to the workers. And if we succeed in doing that, we succeed in making the place a little bit better. Dumpling also is very value aligned with how we think about it and kind of giving power back to individuals. Yes. What was the second part of the question?
Do you foresee Lean ever adding like a value set of education, to actually help individuals learn how to manage their finances better?
Yeah, absolutely. So that's loaded. I feel like every question I take is loaded because there's so much thinking that goes behind every single one. But I think there's a couple of things there. One, from Mint, one thing we do know, Dan Ariely is this consumer behavioral economist, and he's written a lot about financial literacy not really being an effective tactic with individuals, because people will read it, but they won't necessarily act on it. Acting on it is what's more challenging than just knowing it. But that I wouldn't fully dismiss financial literacy. I think the approach to that on our side would be automating good financial decisions. Like I learned a lot on Mint. People set budgets and then they forget about them. They're done. Like you said it in January, just like getting a gym membership. Next thing you know, you're getting billed every month, but it's the same thing with budgets. Like it's just there. People set financial goals and they never look at them. There's like 100,000 goals set every day on Mint. And those goals are not ever revisited by the vast majority of those individuals. And so I think more than even educating, it's explaining what you're doing, but operating on behalf of them. So one of the things that we're thinking about when we think about what our approach to taxes will be is how do we automate that for you? Like how do we help the categorization, the deductions that you can take to prepping your statement rather than like explaining to you how to do it? Like how do we do it for you? And that's kind of been our approach so far, and that's where our learnings take us. But I do think there is value. So not to diminish the idea of educating them, because I think educating them is important, because you always want to know, like, why are you doing this with my money, or like why did that happen? Why did that work? So always educating, but doing it with them or doing it on behalf of them while informing them, I think is the most effective method of that. But yeah, absolutely, it's critical. These good financial habits. I still can't wrap my head around why there's not like a financial planning class in high school. Like it's, you're like taking calculus, but Rich, being a physicist, that it was practically important for you, but you're taking calculus, but you're not taking a basic financial planning class. Like, how do you budget? How do you manage your money? Like, should you go and get 10 credit cards and max out your credit line? Probably not, right? But people don't get that until it's too late. So yeah, great question, by the way. And I met with Nate at Dumpling.
Oh, you did? Okay.
Yeah, I'm
Cool.
actually gonna. I promised him I'd come up to the Bay Area and grab a beer with him, and I haven't done that yet. So that's a great reminder. So I'm really glad. I might. Maybe we all three of us can get a beer.
I'm actually in Seattle, so our other co-founders here in Seattle where I am. But yeah, I think the taxes would be a great thing. We've definitely found that even with TurboTax and other tools available, like that's even daunting. And I think actually packaging a tool specifically labeled for gig workers makes it immediately less daunting to someone who's in that space. So I think that could be really valuable to a lot of people. Thank you for your answer.
Yeah, thanks for your question. It's a great one.
Yeah, those are really great questions. So, wow, I just realized we're almost out of time here. So, yeah, this is a really great chat, though. And thanks for taking the time to join us for this. Before we wrap it up, though, I did want to ask, so you have some really incredible experience, building financial products and services, and then also marketplace insights. So, do you have any tips for early stage marketplace founders? That might be helpful, that are thinking through how they might want to offer financial services?
Partner with Lean.
Yeah, I was about to say, aside from just message you.
Yeah. No, it's important, I think, is like the core message. I'd want anybody that's building that, because a lot of times in building a business, you're focused on, okay, we got to get a bunch of folks on the demand side. We got to get a bunch of people on the supply side, and then we got to pay them. So let's go and get whatever tool after the first Google search or that I heard about that'll help us do this. But in reality, the graduation is you go and get all those people, and then you realize that they're not sticking around, and then you realize they're not engaging as much as you want, and so that will inevitably happen. That's a problem every single marketplace eventually runs into later, if not earlier. And the one thing I would say is be really thoughtful about it. There's a set of problems that people have, and the earlier you hit them, even if it doesn't seem like it's the number one priority at the time, the more likely you're going to build a long-term sustainable business than a short-term one. And the second piece of advice is, if you really care about it, don't stop. Like I subscribe to the idea of the only way you can fail is if you give up or you run out of money. And there's a lot of money going around these days. So as long as you're paying attention to those pitch calls and you're understanding why somebody said no and why somebody else said yes, you'll get there. You'll get the money. It's just, you have to be resilient. Like, it's going to throw you. Just when people tell you that this is not going to work, you just take it and you keep going. Like, all right, why? Okay, you fix that. Just don't stop. Just keep going. You'll get there. You'll get there. But it's not easy. One of the first pieces of advice I got was, you're going to have days that are extraordinary highs and days that are extraordinary lows, and sometimes it might be the same day. Absolutely true. Just keep cranking. Like, focus on one day at a time. Keep moving forward. Like, just baby steps all the way, and you'll get there. You'll always get there. You're on your way. When you're like on a treadmill or like running, and you're like, oh man, I gotta do this for 30 minutes, and the next thing you know, you're like off thinking about something, and 25 minutes has already gone by. And you're like, oh, wow, that was actually way easier than I thought. It was way harder to get started than it was to actually do it. And so just keep your eye on the prize and don't stop, is my just general advice to anybody that wants to start it. You could do it. Like, you don't need a degree. You don't need to go get an MBA. You don't need everyone to agree with you. As long as you're passionate about it, you have that conviction, and you're willing to just go at it, blood, sweat, tears, whatever it takes, you'll get it. 100% you'll get it. Just don't stop.
I love it. So this is a great way to wrap it up. And yeah, thanks again for taking the time to join us here. Just time for a quick plug though. Where can we keep up with you at?
Oh yeah, reach out to me in the community, comment on that, come connect with me on LinkedIn. My email address is tilak@withlean.com. The website is withlean.com. So go check out the website. You can even submit a quote there or just email me directly. And I can paste my email address in the thread as well to make it a little bit easier. But even if you just want to talk and there's no, you don't care about using the product, I'm happy to do it. I mean, look, we're all stuck in our homes anyway. So like a refreshing conversation is always valuable, right? So
Yeah, we can certainly relate. No, we really appreciate it. So we might have you back on for a follow-up because I feel like you and I could just go on for a while and all the great questions that we have here too. So
yeah, thank you everyone. The questions were awesome. It made me think. I'm glad I'm on my second cup here.